Greetings traders, this is Houston Strong from thetradingedge.org, and here is your weekly market outlook for May the 18th to 22nd, 2020. So if you've been listening to these videos, you know that the past few weeks I've been cautioning folks to resist that urge or that temptation to sort of short the markets. Right now, if you recall from last week's video, there's a real big disconnect between what's going on with the economy and of course what's happening with coronavirus versus what's actually happening in the stock market. And so this week presented some great pullback opportunities for those traders who have the cognitive flexibility to be able to balance again those two poles. That is, what's happening in the economy versus what's happening in the stock market. So once again, for many traders, the markets continue to do what they do best, and that is to confound most traders most of the time. But if you are able to balance these perspectives and simply focus on what's actually happening in the present, then you're gonna find yourself on the right side of the markets most of the time. I'm not saying all the time when you follow this approach, but all you need to do is to be right most of the time. All right, so let's talk about the coming week, and then we'll get to the charts, and let's go through the week that was and what's coming up for the next week or so. So Econ Calendar wise, we do have Victoria Day on Canada on the Canadian side on Monday. So to my fellow Canadians, happy Victoria Day if you're taking that time off. No holidays obviously for the U.S. markets this coming week. A little bit of a slower news week as well. We have Jerome Powell talking at 10 o'clock on Tuesday. People may be wondering if he's going to, perhaps entertain, or the Fed will entertain negative interest rates. That was shot down this past week. Who knows? Maybe they talk about it this week and markets rally even more. Wednesday we have the Fed minutes, so nothing really expected to change there. I think people are expecting, if anything, more accommodations, a bigger accommodative stance for the economy. So let's see if anything changes around that verbiage. Thursday, that jobless claims number. People are still watching that. It didn't come out as bad this past week, so the markets, actually, the markets rally whether or not that number is good or bad. But let's keep watching it, right? So the numbers are pretty large still. We're talking, close to 2 million people each and every week claiming jobless job insurance. So yeah, the numbers are very staggering right now. But once again, we have to balance that out with what we're doing here as traders, and that is seeing how that reflects in terms of price in the markets. And right now, the markets are rallying on this quote unquote bad news, because any bad news right now is still good news for the markets. And then we've got the home sales number at 10 on Thursday, worth watching. In terms of the earnings calendar, it's a bit of a slower week, but there are some big names reporting, so we do want to watch that. On Monday, we have a number of interesting names. Baidu, IQ, BILI, all Chinese ADRs. Will be interesting to watch those. Tuesday, we got the big old Walmart, HD, and Home Depot, so we want to see how those guys report. Because Walmart's off the highs, but still will not take much for Walmart to go back to all-time highs. Wednesday, we got the targets. So TGT, that'll be interesting to watch. You got Take-Two Interactive as well as Lowe's. See if people are doing more home renos. See if that gets reflected in Lowe's home prices. And then Thursday, NVDA. That'll be the big one to watch. NVDA, because NVIDIA on Friday hit all-time highs. Fantastic pullback opportunity that happened this past week to buy NVIDIA. On that pullback. And when I get to the charts, I'll talk about why the market is currently as I've been saying already, it's in a strong uptrend. All these dips are buyable. So this is sort of what happened in, at the late last year, 2019. Every single dip was bought, and this is what's happening so far. And the last day of the week, Friday, this coming Friday, we got Baba reporting, so another Chinese ADR. Then another big name is John Deere, DE. Let's see how that one comes out. So that's it for the econ news. That's it for the earnings calendar. Let's jump into the charts now. And we start, as we always do, with our friend, the VXX. So this, we had a small comment the past week in the YouTube comment section. And again, if you have any questions or comments, feel free to leave them on YouTube or on the blog in the comment section. I always read them, and if there are any questions, I'll do my best to answer them either there or in the video here. The question was, can VIX go to 0? Well, again, when I do the analysis for the charts here, I'm looking at VXX, which is different than obviously the VIX, VIX. So if or if you're trading on, if you're looking at TradingView, you can look at the VIX symbol, and that's actually the volatility index for the S&P 500. And to keep the answer short, the VIX cannot go to 0. So this index cannot go to 0 because the index, you can Google it and you can see how it's constructed. But in layman's terms, it's basically a simple, I'll simplify it a lot. It is basically a ratio between puts and calls. Technically, it's out of the money puts and calls, but that doesn't really matter for our conversation here. The point is, it's a ratio, and the ratio can never go to 0 because it can never divide it by 0. So VIX cannot go to 0. But VXX, which is an ETN, so this is not an ETF, it's an exchange traded note. So again, you can Google that and find out what the difference is between an ETN and an ETF. I'll give you a hint. ETN is a debt obligation, and ETF is actually a different product, exchange traded fund that actually holds the underlying. Now, the ETF is composed of a number of contracts, futures contracts, both near-term and mid-term VIX futures contracts. Because of the constant rebalancing of this product and how they're always having to rebalance with short-term and mid-term contracts, futures contracts, this thing has a natural decay to it, and that's why this thing will go to 0 given enough time. That's why here it's traded, that's why the price up here is 122,000, because the VIX in its lifetime has had many reverse splits. So eventually again it will get cheap enough where they will have to reverse split it before it goes to 0. So this product will go to 0. All VIX derivatives, or that basically have that structure, carrying the short and the midterm, the VIX futures contract, if they have that type of structure, they will all go to 0. That's why whether you trade the VXX or SVIXY, or there's TVIX, it doesn't really matter which one. We're talking about UVIXY, all those other ones that are popular. It doesn't matter which ones you trade, they all have that structure to them, and that means they will all eventually go to 0. So that's something worth understanding, because this means from an investing perspective, especially for investors, that means people who are holding longer term, you do not want to hold this thing for a long period of time because it just will decay. So you cannot put this in your retirement accounts, the IRA or RSP, and hope that one day this thing's going to be worth anything, because it will go to 0, or you're going to be left with pretty much close to 0 if you keep this thing too long. So it's a trading vehicle. Okay, so that's the understanding. So that disclosure out of the way, good good question. So let's get into the charts now. So let's start with VIX, and I'll spend a bit more time as usual on the VIX and the SPY contract, and then we can fast forward through the indexes, because they all pretty much look the same after that, with a few different nuances here and there. So VIX, big picture, right? Big up bar. Big March inside April. Now we went down one side in the month of May, but it's popped back up now, right? So it has gone inside bar down. So it's the expectation is if thing gets back below here again, coming back out the other side down there. Full time frame alignment to the downside, meaning it's below the quarterly open, below the monthly open now. The trend, the bias is to the downside on the VIX, even though you might get pops until you can clear above the monthly open and the quarterly open. The bias is to the downside. This week here, what happens? The last week we had that outside bar, okay, and so then it went outside bar and down at one point during the week, but it popped back up again. At one point during the week, it was actually nearly went above the prior week's high, which was around $33. So 33 right there. Oh, sorry, 43. Excuse me. We came very close to taking out that pivot. I really thought we were at one point. Came very close. The high here was 42.86. So within 14 cents of taking out that pivot high. I think on any other product that probably would have taken out that high there, but because of this decay in this product, we could not take out that pivot high. We did that on the indices, excuse me, just not on the VIX product. So for the coming week, outside bar down. If it breaks below this low here, you got a Momo down on the week. That means this thing's gonna melt even further, even faster if you get that Momo down condition. Otherwise, you got to watch out. If it pops above 42.86 this coming week, I'll draw the ranges now. That'll create a reversal. Outside bar down, pops back up. The issue here is that you still have the quarterly open right there, so you're going to have a bit of a challenge getting above that area, but that's what you want to see if you're a VIX bull. Like if you expect the markets to fall apart, you definitely want to see VIX pop above this past week's high, because then that'll be interesting to see if we can take out that pivot high there. Okay. Otherwise, it's still a lot of work by the buyers to have to come through this range. Okay, so this week here was pretty interesting because we had a pop up. So we had a pop down in the beginning of the week, right? So it actually opened up fairly flat, and then for the rest of the Monday, it basically just melted. It looked like it was going to be a regular VIX melt week, but by Tuesday, it did a reversal. So here, if you recall from my last week's video, I talked about that reversal signal, whether it's the red to green signal or the red dog reversal signal. You can Google those, or you can watch last week's video if you want to see how I examined it and looked at it from a price action perspective. But that's what we had on Tuesday, right? So it gaps down and actually comes back into the range. So once it comes back into the prior bar's low, that's a reversal signal. That's your classic red dog reversal. If you're more aggressive, you can take it when it goes red to green, which is a more aggressive signal. There's plenty of time to get in there, and this thing went out the entire side of the other side of that bar, going through that entire range. So that creates the outside bar. Okay, so outside bar, and then the next day, Wednesday, it gaps up and it clears above the weekly open. See, so that turns the week green, and then it goes Momo up, outside bar up, Momo up, right? Once it breaks above this high here, Momo up, and Momo up. Here's the orange line, rejection right there. That's the monthly open, right? So it gets rejected right there. The sellers come in, and here's that level. I thought we were going to take out that level there, 43. Again, 42.86 was the week's high. So they could not push it high enough to get above that pivot high there, but it came close, 14 cents. So then we have a Momo up condition that got extinguished on Friday when it broke below that low there, and then it started melting again as VIX does. But this here, if you cannot get outside of this little box, see this? Orange line is your resistance line, purple is your support. That's what causes the issue. This is called mixed time frame alignment. So here you're trading below the monthly open. That means it's a red monthly bar, but you got a green week. So you got two forces, opposing forces, that are causing price to get sandwiched in between these two areas. So this coming week, you want to see if they can clear either side of that, right? So wherever we open on Monday, let's say we open here, just for sake of argument, we open there, that'll be below the monthly open. If we start trading below it, they'll be below the weekly open, right? So then you have full time frame alignment once again to the downside. This is why the bias is to the downside. If price breaks below the weekly open, breaks back below wherever it opens on Monday, and then you're below. It'll be a week red, red week, red month, red quarter. That's your easy bias. Okay, so let's move around some of our gaps because we did some gap fills here. So this gap got filled finally. I think I pointed that out last week. So 34.11. Let's get rid of that one. We'll move it now. We have a new gap that got we got that gap situation. Okay, that one got filled. So so that one got filled there. Is that correct? I'm just gonna put that here. Open here of 36.34. The low is nope, did not get filled. So it came very, very close. So there's your gap right there, looking like it's gonna has a good chance of getting it. So here, right? So it's a gap game. So here, here's the Wednesday. It fills this gap there. Same session. It fills that gap there. And then here, there was another unfilled gap right there. All right, that got filled on Thursday. So they filled three gaps. There's one there, gap filled, gap filled, gap filled. So now we'll delete those filled gaps and we'll move the other ones forward. So get rid of that one and that one. Now we have a gap right there, very, very close to getting filled. Sorry, that's not a gap. Sorry, the gap got that was a. So that's not correct there. I was looking at the wrong side of that bar. So delete that. So no gap to be filled there. We have a close here that got filled there. So yeah, no gaps in the immediate vicinity. The next gap is, we have another one up here somewhere. Let's see here. Closed. Nope. Yeah, the next one's up there. So 46.42. Otherwise, you got to go all the way down here to 29.82. So relatively gap free now in this immediate vicinity. So we'll see which way of this range price breaks. So that's the so here again, I'll just point this out before we move on. So it did the reversal right here, right? So there's reversal I pointed out here, and did the mirror opposite on Thursday. Gapped up and then came back into the range. Okay, so gapped up, came back into the range again. So there's your opposite signal coming to the short side, and then they have a 1-2 day reversal back to the downside again. Okay, so pretty clean stuff on the VIX. On the 4-hour chart, it looks like this. Let's bring up the 4-hour chart. And right here. So see here, I'll just zoom in a little closer. So here is the reversal that happened on Tuesday. So see how we gap down here? It gaps down, and once price comes back into that range right there, there's your buy signal. So it was going Momo down, outside bar, down, Momo down, then rip right through, Momo up. So it goes outside bar up, that turns into Momo up, and then the Momo continues until that low gets taken out. That low gets caused by this gap reversal. So you see how it gaps up here, and then it comes into the prior bar's high. There's a reversal signal, stop goes above that, and then it fades, creating the reversal back to the downside here. Still above the weekly open, that means it's a green week, and we know that already. So interestingly enough, it's found support right on this prior trend line high. So if I go back now to my weekly chart, you'll see that trend line high. Actually, is that on my daily chart? Let's see here. Let us go back to the top end here. I don't have it drawn on that one, so let's go back to my 4-hour. Excuse me for bouncing around so much. And yeah, so that was a prior trend line that we had drawn to way well in advance. So you can see how far that goes back. That then ends up being a level of support. So, and in this case, it doesn't really matter how far it goes back, but it was just a very coincidental line. The more important part is the price action. If you learn how to read the price action, then this is just a confluence of areas and signals. Okay, so there's your outside bar up, very, very easy to read, and you do not want to be getting in front of this thing trying to short the VIX until you see some exhaustion. Okay, and you get the exhaustion when the gap fades, because here the buyers of the VIX got everything they could ask for, right? You gap up, and if you cannot hold that gap, right, and you have a pivot right there, and you can't take it out, it's so close. Remember that 42.86 being the high. Then as soon as it comes back in, they've lost all their steam, and so now once it breaks below there, you have that confirmation of that Momo up condition being extinguished, and then it fades back into the range again. So what's that look like? Well, this one more thing here, 2-day chart before we move on. Outside bar up now, so Momo up on the 2-day chart, but if you break below this low here on Monday, there is your extinguishing of the momentum, and you're expecting it to come back out the other side, taking out the prior pivot low. That'll be Monday's lows, or this past Monday's lows. So SPY looks very, very similar. Interesting chart. I'll do one quick review of the higher time frames. Month, outside bar down, inside bar, inside bar. So Momo down, inside, inside. So right now, trading fairly tight inside of April's range. So for this past week, we actually had a down bar the prior week, and we actually had an outside bar this past week. Okay, so outside bar taking out both sides of the range. Recall, if you were looking at the SPY chart this week, at one point during the week, it looked pretty bearish because this bar here was actually all the way down here at one point. So on Tuesday, right, on Tuesday and Wednesday, this bar was completely red, all the way down here. It was a big red bar. It looked very, very bearish. And I think I said in my chat room, I said, we still got a lot of week left. It was only Tuesday or Wednesday. The bar is very red, but with this much time left in the week, this bar could change significantly by the time Friday approaches and closes. And look what we have now to the end of the week. A big, basically looks like a hammer, right? So the buyers certainly bought it all the way back into the range again, and this bar now looks a lot less bearish than it did when it was down here. Okay, so this is the importance of understanding intra bars, and that means the way you get intra bar action is by looking at a lower time frame and seeing what consists that higher time frame bar. So when you do multi-time frame analysis, that's the magic of it. That's the real understanding of it, is that inside each bar is a whole nother set of fractals that helps you understand what's actually happening inside the higher time frame bar. So there's your outside bar now on the weekly chart. Excuse me. You really want to see now how you break outside of this past week's range. Does it create some sort of Momo condition, right? Does it go Momo up, Momo down, or just stay inside this range now, given how wide that was for the SPY this past week? If you open right dead smack in the middle here like that, you might have an inside week, but we'll see. That's one possibility, and we'll want to be prepared for that. So SPY wise, on the daily chart, So look at what happened today, this past week. So here, what happened a couple weeks ago was we actually had a test of the 200-day moving average. That little black line there, we tested that back on the 29th of April. That held. You see that? That held right there. We tested it again on Monday. So the Monday, we tapped it again, it held. And then Tuesday, the selling came in. It was a small reversal, very, very small, but it happened. This thing did gap up slightly. I think the open here was 293.71. The high was 2. Nope, it wasn't actually. It was not. Well, it was technically it was a gap, but it did not gap above the prior bar's high. So it did gap above the prior. It did gap above where it closed. But to be a really, really great reversal signal, it'd be nice if it gaps up even higher and comes back into the range, because it makes it really obvious. But it did happen. It was obviously a gap up, and they faded the gap, and then they took it from one end to the other end. Outside bar down. Okay, down, down, and then they extinguished the momentum here on Friday. But it happened here, right? So here you can see they bought it back, bounced off the Bollinger Band at the bottom. And look, I'll just draw your attention to this. See how tight that range is? So you can see here the Bollinger Bands are tightening. So we actually have some consolidation happening here now. We don't have this wide, loose price action that we had in prior weeks, right? We had big, big swings. The swings are actually getting smaller and smaller and smaller. And now it shows you that by the contracting Bollinger Bands. That's why I like looking at Bollinger Bands. In this case here, when you have a lower tap of the Bollinger Band, it doesn't break through and stay below it, there's always a good chance it comes back out and taps the other side of that Bollinger Band. So that's the expectation now. So we're watching to see if and how and when this thing goes from this side to the other side. If the bands stay tight like this, then you can expect this thing to remain tight. And this is why I was saying the weekly chart, we might get an inside week this coming week, given how large that range is, but how tight the actual trading is. Okay, so there's your Momo up condition. Momo down. Sorry, not Momo down, but Momo down. We extinguished it, and now we're trading above the quarterly open, above the monthly open on Friday, and there's your weekly open. But we're going to open wherever we open on Monday, around here probably. And if we get back above the weekly open, they're going after that pivot right there, this past week's highs, right? So let's see how that plays out. But right now the bias is the upside, and these pullbacks had all been buyable, right? So these have all been buyable, and the Qs remain the strongest. So on the SPY, I'll just show you the same thing I showed you on the VIX chart. But this is what we're watching for: the outside bar down. That's the opposite of the VIX, obviously. Outside bar down, you break above there. That will be a green week, green month, green quarter, and they're going to go after that pivot there. Okay, and that'll potentially make it go Momo up on the week. That's what you're watching for as a possibility. Okay, but all the indices did this. So I'll show you one final 4-hour chart. And so we were selling off this past week on was it Tuesday, Wednesday? It looked like this. Okay, so it was going Momo up on Monday, hit that 200-day moving average, right? We saw the 200-day. Now it goes Momo down. So it goes Momo down, down, down. We're waiting for that Momo to get extinguished, right? So that's what we're waiting for. If and when that happens, we're waiting for that to happen. And so it happened here, right? So there's your Thursday. It cracked above the prior bar's high, and then now it's Momo up on the 4-hour chart on all the indices. So all the indices pretty much did the same thing. They all had that Momo down condition. That means they all were doing the same thing. The correlations are high, and so you're looking to see, when you're watching this, you have more confidence in things because they're all trading the same way. So it doesn't really matter which instrument you choose at that point. You're watching for that condition to either remain the same, Momo down, or for one of the indices to begin to break it, and then they will all break it. So let's look at Qs now. Qs being the strongest of all the indices on the monthly chart here. Outside bar down, it's Momo down. Then it got extinguished here in April. It's gone 2 bars up now. Up bar, and they're going after that pivot high. All-time highs. Okay, that's still a little ways away, but it looks within a shooting distance or spitting distance. Weekly chart. We had no outside bar this past week on the Qs. We actually went outside bar and up. So the pullback on Qs is very, very shallow. But so we got a Momo up condition on the Qs. We actually broke to the upside, never broke to the downside. So very, very strong chart so far. Qs. It says Momo up. So this thing keeps going up, up, up. That's momentum to the upside. We got that unfilled gap right there, not far away. On the daily charts, want to call your attention to this. So as you know, when this happened this past week, we broke below. So this blue line here, if you don't remember what it is, it's the 8-period EMEA. I was watching that once, because you're trading, for the past several weeks, we've been trading in the we're trading above that 8 period. So there's a bit of space here, white space between that 8 period and where price is closing. There's actually a 5, if you actually overlay the 5 period moving average, you'd actually see that this thing's actually riding like a 5 period moving average. I don't need to lay it on there because in my mind I can see it. I know that the 5 period is actually a bit faster than the 8, so this is actually riding a 5 period or a similar type of lower time frame. It doesn't really matter which one it is. But the point is, it was riding this shorter time frame EMEA higher. Now, finally on Tuesday, Wednesday, it broke down, and once you break below the 8, I was saying you're gonna probably test the 20, and I want to see how it tests the 20. I want to see what happens at that point. And guess what? Look at that right there. They bought it right back. So literally, there are people waiting there to buy that touch. So imagine, you've had to wait this entire rally starting from this area here, April, right, where it finally broke above this 20 period moving average, that green line. All of April, you never came back there, and now, month of May, you've had to wait 1 month and 2 weeks to buy that. If that's your buy point, if you're using moving averages to buy, there were people there waiting for it. So they're waiting for that pullback, and they took that shot, and so far it's paying up for them. So outside bar down, and down, and then reversed here on Friday, extinguishing that momentum to the downside. So the Qs, they bought it back aggressively, and so far they're supporting that. So right now, if we take a look at let's something like an Apple. Look at this. Apple's very, very strong right now. So this is Apple daily chart. Look how aggressive the chart is on that. So they're trying to gun it right back to all-time highs again, even with the increased kind of worries with an escalation in a trade with China. They're still buying back Apple. Apple did a reversal here on Friday, right? So it went reversed. It's a gap lower and actually reversed and came back up to the range again. So here's the 8 period moving average. It never even got to the 20. So yeah, you got buyers supporting this thing, and they're trying to bid it up. So people are still looking to buy pullbacks. So right now, the easy money is definitely on the long side. The reason being is there's more time frame alignment up on the long side. In order for this thing to really switch, in order for sellers to be able to really break down Apple's chart, you got to look at a 3-month chart. Right, like this is what you need to see. The big picture. The big picture is this. It's an outside inside on the quarter. Okay, so the quarterly chart. What would it take to turn this chart red? Imagine that. You'd have to take it from where it's closing at, where it closed at now, 307.71. You'd have to get it to trade down here to 46.50. Right. So imagine what kind of move that would be required for this thing to come all the way back through here again and break below this low to turn this quarter red. So in all likelihood, and I'm gonna, this is not a prediction. This is just what I would need to see before I get very bearish on Apple. Is that I need to see the potential for this quarter to break down, right? And so far on the quarterly, it's not happening. It's just not happening yet, because the low. When I say break down, it means I want to see a reversal. I want to see this low get taken out, or at the very least, I want to see some chance of this thing actually breaking down on a higher time frame. Look at the weekly chart. Right, like you'd have to see this thing come back through the entire range here below this area here, and I'm not seeing that setup yet on any of these time frames. So maybe here on the monthly chart in May, maybe when May ends, you get an inside bar, and up here it breaks below this month's lows, May, then potentially come back through this range here. But right now in May, what's the chance of May reversing? Meaning, when I say reversing, it means you have to take out not just this bar, but the prior bar's low, right? So you'd have to come back through here. Very, very slim chance of happening in May. So May, your bias is better off being long than trying to be cute and short. Because if you're gonna try to be cute and short, the shorts have to be very fast, right? And it's not really worth the risk reward, because then oftentimes if you have short in the brain, it's very difficult to then flip around, get out of your shorts, and then reposition back long again to catch the easier money to the upside, because the easier money has been to the upside. Okay, so that's it for Qs and Apple. Let's talk about Dow now. The reason I showed Apple obviously is Apple being one of the largest components of both the Dow and the Nasdaq and all the indices and the SPY. It's going to be hard to reverse the indices unless Apple starts to break down, and I don't see Apple breaking down yet, given all the strength that the buyers are showing. So let's talk about Dow now a little faster. As we get into things, basically the exact same condition. So now what I'm watching for the Dow, look, we had the same Momo down on the 4-hour chart. Remember Tuesday, Wednesday sell off, and they bought it right back here. Look at the reversal. Look how strong that reversal is. It gaps, opens here, gaps down, they trade lower, and then the buyers buy it back. Comes back on the range, there's your reversal signal, comes back out the other side, and they're coming back up now. So that means they're all the same though on the 2-day chart. It was all Momo down, so it was all outside bar down. We break above this pivot high on Monday, come back out the other side of the range. Weekly chart, also an outside bar on the Dow. So redraw those ranges. We want to see now which side of this range do we get this coming week. Is it break out to the top, to the bottom, or stay inside? Russell, being the weakest one, actually showed some pretty good relative strength on Friday, and that always makes me worry because if I'm along things, I'm always worried because of recent historical precedents. In that the Russell, when it's strong, is usually not a good signal for additional strength in the indices. It seems like the Russell's always trying to play catch up, and that means it's kind of a lagging, it's kind of like a lagging leader. So by the time Russell plays catch up, that's kind of it for the move. So you're gonna watch out for Russell because Russell's chart's still not that strong. So what our time frame? Inside on the month. Week, we got the outside bar, right? So now remember, SPY, Dow, Russell all have outside bars this past week. Qs do not have an outside bar. Worth remembering. So on the Russell side here, here's the thing. This is the weakest of all the indices. It's up above the quarterly open. So there's your blue line, but trading below the month and the week. So out of all the indices, Russell's still the weakest of the bunch. And there was no dip buying on the 20-day there, right? So it's trading below the 20-day. If you're looking at that kind of thing, your purple line is your 50-day, and there's your 200-day. So Russell, out of all the indices, not looking so hot. So this is the one that I would go to if I was going to short an index. I'd be looking at Russell to fade because this guy's certainly the least impressive out of all the indices. TSX, how is the Canadian side faring? Okay, very similar to the Dow. So you got this Momo down inside on the monthly chart. So that guy's consolidating on the monthly. This means you can expect anytime, if you look at the video from 2 weeks ago, we talked about what can happen when you trade inside bar, and inside bar usually means it can mean a lot of chop if you don't take out the prior bar's ranges. So right now, inside bar up, but also went down, so that's an outside bar, right? So inside outside now. Now, if you break outside of this past week's range, that's going to be a Momo move because you had tight consolidation that chopped up both sides this past week. Now, if it breaks outside of one of these ranges, that that means either the buyers or sellers are far more aggressive and they've taken control. You can expect a strong move to offset this bit of chop. So that's what you can watch for now, is that if you can get outside this week's range, that will be a strong move. Or if you stay inside this week's range, it can be a very interesting pattern because then you get an inside, outside, meaning consolidation, expansion, and maybe another consolidationary week. Then that next week's move will be expansionary once again. So watch for that potential scenario there on TSX. Okay, and the 2 days, what do we got in the 2 day? Pretty unextraordinary in the 2 day. Basically just a inside bar there now to wrap up the week. So let's look at emerging markets. A little bit weak on the emerging markets front. Looks a lot like the TSX here, but it actually had a Momo down for 3 months. So Momo down, and then inside, sitting below this kind of sort of trend line here now. So finding resistance here, cannot break above it. So right now consolidating right there on the monthly chart. Weekly chart, it did go inside bar up, but came right back on the range again. So inside bar up, and now what you do not want to see if you're a buyer of emerging markets, you do not want to see this low get taken out because that will be inside bar reversal to the downside. You still got the quarterly open right there though, so you still expect dip buyers until this thing turns red. They will try to defend this thing if it breaks below this past week's lows. Okay, so emerging markets, that's want to watch out for what we're waiting to see there on that one. So you had Momo on the week. Yeah, Momo down the week. Then it did not get extinguished though, right? So here, Momo down, big green bar reversal. Friday, pretty uneventful, inside day. If you can break back above there, then we're going to come back out after these ranges there. but fairly tight, right? So you can see by the Bollinger Bands once again how tight this trading has been in relation to what it was previously. Like, obviously the last, the beginning of the year was very, very, very volatile. You have a lot of gaps in this chart, and most of the trend was to the downside. Now we're getting to a consolidation environment where the ranges are, they're playing ping pong between each side of that Bollinger Band, because you're inside this, right? This is what that looks like. When you're trading inside bar, by definition, you're contracting. It's consolidation there, and that's why the Bollinger Bands reflect that by seeing a tightening of the range. Okay, so there's your EM. TLT, risk on, risk off. This is why I look at the TLT, or one of the reasons anyways. Right now, big picture, outside bar, inside bar, and it did go down on the month, but they bought it back. So the month, still got a good 2 weeks left in the month here. So it's, you're still wanting to see, what side of this range this thing closes on, but for now you're back inside of the prior month's range. So for TLT, what I'm looking at is this. I did go down and up, so now you're getting that very choppy action that you often get with inside bar trading. You take out one side of the range, and then you take out the other side of the range. So now you're getting that sort of chop situation here. But again, here's the orange lines. That means you're inside of this month's range. So that's tight. Right? How can you tell it's tight? You look at the Bollinger Bands, it's going to show you that as well. You see that how these things are flat. When you're trending, these things do not constrict like that. So this, as you can tell, is fairly flat. That's reflected in, you can see that many number of ways if you want to. Whatever helps you see that. You can either look at inside bars or through something like a Bollinger Band to help you see the volatility's tightening. Okay. In fact, it's tightening even further. Look at the 2-day chart. You see how the bars are coming in? I mean, the Bollinger Bands, it's tightening, getting rangier and rangier. At some point there'll be expansion again, but that means the volatility is ebbing out of this TLT product. So TLT, looking for that now. We had this inside bar reversal. I'll just show you a nice setup here. Inside bar down to start the week, right? Look at that. That's a 50-day moving average. It found support there the prior Wednesday, and then it found support here on Monday. Pounced off it again. Inside bar down. Once it breaks above there, there's your reversal and causes the 1, 2, 3 day, even 4 until it got a reversal signal here. Look, tested the quarterly open right there. These levels are very, very effective. If that's why I always show these levels, and I like to get people to understand how the importance of seeing them. Here's your monthly open. It acted as a first level of resistance. Then that quarterly open, they sold it right before it got there. Actually, it did break above there slightly, and they sold it right there. So causes the outside bar. What's the next bar now on TLT on Monday? What side of this range of that outside bar do you fall on? I'll just redraw this this week's range and see how you break outside this week's range. Okay, so there it is on TLT. Now, how about gold? And gold, man, we've been watching gold for, I've been calling out gold for a while now, and it looks like we finally got the move on gold. This could be the beginning of a multi-week move on gold now. So definitely, I think we're on the right side of price here. I've been saying that, number one, the fundamentals are they can't get much better than this right now for gold. Governments are printing literally trillions of dollars of money they don't have. That they have to basically print. So if there isn't a better gold environment, the only thing missing is, well, I think you have it as well, is more geopolitical risk. So there obviously there's geopolitical risk in terms of the usual actors like China, maybe an Iran conflict, maybe some sort of Arab conflict, maybe some sort of Russian conflict. If you added those to the picture, you'd even have a better fundamental environment for gold. But as it stands now, just the paper printing itself is very, very attractive for this shiny metal. So I've been saying all pullbacks, you want to look at them seriously as buying opportunities, because you have a Momo up on the quarterly chart. That means on the lower time frames, using this as a timing signal to try to get long gold or any kind of gold product. So look, it's Momo up on the month, Momo up on the quarter. On the week, we had a multi-week pullback or consolidation period, right? So it broke above. Look, this is the pullback that happened that was very aggressive in March. They bought it all the way back. Look at that outside bar. Goes outside bar down, taps the 50-period moving average on the week. Outside bar down, back up, comes out the other side. Inside week now. So this is what we're saying. Inside, looking to see how it resolves that. This week it finally broke above. I would not be surprised for it to come back in again to do a tap and test of that. The second mouse gets the cheese scenario before we get higher prices. So MGC, there's your double inside week, and finally with a resolution to the upside. Okay, so I got long, not MGC, but I got long a bunch of gold miners in the form of ETFs and individual gold mining stocks. So I'll show you, let's say GDX. This is an ETF. I did not trade GDX. I chose Nugget. NUGT has a little more leverage to it, but basically the same looking chart. And it did not have a reverse split, so I don't have to fix the charts for that. A little cleaner for this example. So here's GDX and the really nice trade here. So once again, inside bar and up. So last week it already broke above the prior week's high, right? So MGC, the gold contract, the micro growth futures, it had that double inside week, right? The gold miners were actually leading. So the gold miners were actually ahead of actual gold futures in this case. Last week it already did a break to the upside, right? So you can see that it did an inside week and up. It already did that. This past week, it actually came back in at one point during the week to retest that break, right? So this is the issue. If you're chasing price, let's say you buy this breakout of like above here, you buy this breakout, you're gonna get tested. It always happens. I've said this many times in these videos, is that you never want to chase price, because unfortunately that's a really, really bad habit that most people initially get taught when they first trade it. When they first learn how to trade, is they want to get into trades quickly, and they think that price is there to accommodate their conveniences or their biases. When in fact, what's more realistic is that the market is composed of many market participants, and most of those participants do not have your best interests in mind, right? So you have to understand that. So that means people will do their best to get you out of your position so that they can get in at better prices. So here, if you chase this and you buy the top of this, it works a little bit, but then it comes all the way back down here again, and you might get scared out on that pullback, and then get out of your trade either at a break even or at a small loss before this move happens. So what I like is to wait for that actual retracement to happen. I call it people getting edged out before I get in. So here on the GDX, we now know that, look, I drew the line. Last week it broke above that purple line. That was the inside week and up, right? You want to see that purple line again on the daily chart. It's here. See here on the daily chart on GDX. So here, this is the prior week. It broke above. So let's say you just buy that high, right? It comes up, pops up, comes back in. You're making a bit of money here, thinking, yeah, I made some money. I bought at 34.21. Then you gotta sit through this pullback. Now it doesn't look steep, but it looks like you're underwater most of the time in that trade. You're only up for 2 days, and it stays red for 1, 2, 3 days. Correct? So your timing is off there, because most of the time in this trade you are actually negative. So had you bought this here, you were actually not green for very long. That's not a good way. That's not a good feeling when you buy something and you're not right, and you're not in the money right away. That just means your timing is off. If you're spending most of your time in the trade underwater and hoping not to get stopped out, that means your timing is off. So you need to usually wait for people to get stopped out first. That means you are doing something wrong because your timing's off. That's allowing people to have positions that are counter to yours that are actually green while yours are red. So here you wait for those folks who are red to get stopped out first, or to endure a great amount of pain. So here, right, there's your purple line, prior week's high, comes back up. We did break above it, right? So we know it's an inside bar and up. Comes back in now, and we're looking for a reversal. Okay, the reversal happens here on Thursday. Inside bar down, and then it comes back up here. Once it props back up above there, you get that continuation move. So as soon as you're in this trade, you're green right away. Those are the best trades. If you look back on your records, usually the best trades are when you're right away, not when you're sitting there hoping that your trade works in your favor. The timing wise helps by first waiting for folks to get stopped out. The weak hands get stopped out before the actual move happens. So on the 4-hour chart, you can get even a little more surgical with that. And there's that purple line again, right? So again, if you had just bought this high or the prior high here, right, you're underwater very, very quickly. You're only right, that's how you bought this high there. Remember we said that was the other high. You bought that, you were only green for a few hours, right? Maybe maybe 4 or 8 hours before you were red for most of that period, right? So you're red underneath this purple line. There's a situation right there. So that's the buy signal right there. Outside, inside, and then it goes up. As soon as it breaks above this pivot high here, the outside inside bar, it's gone. Okay, and so that's the very nice situation when it plays out. This one here, outside inside, and I'll be very frank, this outside inside, this one here fails. So it goes outside inside and up, but then it comes back into the range again, takes out these prior lows. But that's the way price works, right? It's price discovery. What you always find out is that not always, but you often see that price will make a lower low before it makes a higher high. Why is that? Because if you get long in this sequence, outside, inside, and up, they're going to stop you out first before the move happens. That's why this low is always going to be lower than that low. You see how that works out? And then this high is going to be higher than that high. So what happens when I connect the dots? Connect the pivots? That's right, it's a broadening formation, right? So that's actually a broadening formation happening there because people are getting stopped out making lower lows before it makes higher highs. So people, unfortunately get taught that the market always makes higher lows and higher highs, when in fact sometimes it can make lower lows and higher highs, and that's why it confounds most people most of the time if you don't have that roadmap. So there is the move now in GDX confirmed, and let's see how far this thing goes now on GDX. Full disclosure, still long, a nugget, JNUG, and some gold names. Now let's get to our fast fire, and then we'll wrap things up. Actually, one more thing, BTC, Bitcoin. So I cannot forget about Bitcoin, the other digital, well, if you want to call it digital gold, but this product, obviously, Bitcoin. If you track cryptos, this week was the big halving or halvening. So this is the last time that Bitcoin's going to oops, wrong time frame there, is going to have a halving. So it's supposed to be it's sort of a big occasion. So the mining rate has dropped, or mining difficulty has increased. So actual mining has dropped, and so it's kind of an uneventful event, right? So it's kind of an uneventful week. People were expecting a lot from this halving. Right now, there hasn't been a lot of fireworks. Let's put it that way. So that's full disclosure. I am long Bitcoin right now, but as I said last week, I have a hard time thinking we're going to have a lot more upside, given that, well, I'm not saying that there's no more upside. I was going to be surprised that there's more upside based on the same news that we've been talking about for the past, again, 6 or 12 months, because everyone knew that halving was coming. So if you're going to take a position, you already would have taken a position. You don't wait for the thing to happen and then take your trade. So I think everything was already priced in the market, which is why we had no reaction. Again, we can get higher prices here, just not on the same event, right? Because that event has already been passed. We had the sell the rumor, buy the rumor, sell the news scenario where it actually sold off right before the event happened, and now basically all you need to know is this past week we had the halving. What happened? Inside week. Nothing happened. All right, so right now nothing happened. This coming week though gets interesting, because when you have a consolidation period like we had this past week, now if it does expand, we get that range expansion, then it gets interesting. So we're going to redraw our ranges. So the past week, Bitcoin has not had a lower low since the week of the 13th of April. So now you have higher low, higher low, higher low, higher low. And also, these are higher highs except for this week because it's an inside week. So now this coming week, you definitely want to see how Bitcoin breaks this inside week here, because that will be very telling. Right now, it is trading full time from alignment to the upside. So my bias is the upside here. I do not want to be shorting Bitcoin here, even though there was a pretty good fall, a pretty big pullback here. I do not want to be participating in this because we don't have full time from alignment for Bitcoin. It did come back 20%. So from peak to trough there, maybe a little more than that even. Peak to trough, it did come back 20%. But look, that's in an uptrend. I don't know if you can tell that or not, but you can clearly see the price is going. This price is going is moving upwards. But it has an upward drift to it. So the fact is that we're also trading above the quarterly open, right there, the monthly open, that orange line. See the sellers when they came back and they pushed it through. Unless you took profits very quickly down here, that evaporated. That evaporated within one or 2 days. So if you were selling short here, you didn't cover down here, you gave back a lot of that money. So the shorts are not that easy. That tells you that the bias is still to the upside. You're trading back above the quarterly open, back above the monthly open, back above the weekly open, and I got long here. Inside bar, break above that, and already took some profits on this trade, expecting this pivot high to get taken out. But again, I have no really big bias on Bitcoin at this point. But the trend is higher, so I simply want to be following price at this point. So on the 2-day chart, you do have an inside bar reversal. That's sort of playing out. Inside bar down, inside bar, breaks to the upside. The idea now is that this pivot high we may get taken out in the short term. Here's your BTC USD. Okay. Let's fast fire now a few charts and we'll wrap things up. Here's some weekly charts to take a look at for the coming week. Some interesting ones to watch. NIO, Chinese car maker, right? Double inside week. Something's going to pop here for NIO. So at some point here, inside, this thing's going to get outside of this contractionary period and it's going to pop. So can it clear April's range? I'll draw April's range right now. Those orange lines, that is April's range. Watching to see if this weekly pattern, sorry, I'm gonna go back to my weekly chart here. If this weekly pattern, see how tight this is? So there, if you can break outside this past week's range, you may get outside of the month's range, and that could be a very expansionary event. Some weakness though. So there's NIO. Here it looks like the metals names are actually acting very weak. So Alcoa double inside week. How's it resolve? The bias to the downside on Alcoa right now, right at the quarterly open, right there. If this thing breaks below there, you can go up, you can break below that. Earnings though, not until July, so lots of time, because they're all kind of look the same. Alcoa looking weak. Nucor double inside week again, doing the exact same type of consolidation. FCX, so Freeport, also double inside. So this whole sector is consolidating. Actually, that's a monthly chart, isn't it? Sorry, I want to show the weekly chart. Weekly. So let's go back. So FCX, double month, but look at this. It did break below this past week's range, inside bar down. Nucor did the same thing. Yeah, inside bar down. This is actually an inside bar reversal short. Inside bar up, inside bar down, but the quarterly holding right now. So that's the thing you want to watch for. And I think I said AA already. Yeah, look at AA. Inside, outside, inside. This, remember, we talked about this pattern earlier in the video, and that it resolved to the downside. That's why you had a 17% move there on Alcoa this past week. Inside, outside, inside. Expansion again. This is what can happen when you have that type of scenario. Okay. CGS or AMD. This one looks like a good chart for the coming week. AMD, inside bar and up this past week, right? Even with that pullback, it did pop up. And now on the daily chart, look at that one. Right on this prior trend line here. And it goes, that pullback was only a 2-day pullback on AMD. Down, down, or up, down. They buy it back on Thursday, green day, inside bar Friday. Now, how do we break on Monday? If you go inside bar up here, that's perfect because, don't forget, here I'm going to draw it in, same thing we did for gold. The MGC or a GDX trade. You're looking for the second mouse gets the cheese set up. I'll delete this line to get us there. So the prior week, it broke above, right? So this past week, it broke above the prior week's highs, comes back in for the retest, right? So anyone who got long this, they bought anywhere in here, they were red, and now inside, we break back above there, we come back after that pivot high, going higher. So AMD, definitely want to watch this coming week. Maybe semis are going to be in play. CGC, so marijuana names, man, I think they bounced. So I'm always saying that, but this one here, looking up, it was a good mover this past week. CGC, inside bar reversal, inside week and down, off of the quarterly open. That makes it look nice, right? So they found buyers right there to keep the quarter green. So the marijuana ETF MJ also did the exact same move. Inside bar and down, looked, at one point here, it was full time from the downside, but they bought all the way back again and were able to close above the quarter and now above the monthly open. So that means that monthly chart is finally green. Okay, so look at that. Momo down, inside. We break above one of these ranges, we'll come back up through there. Full time from alignment. So MJ marijuana sector looking very interesting. This might have been a potential bottom here for this marijuana industry. TDOC, this name's still looking strong. So on the weekly, you got the outside, inside, and up on the on TDOC, and let's put that in purple for our weekly range. Okay, and so on the daily, there, Monday, you get the breakout. Tuesday comes a little higher up. Wednesday, you get a sell-off. Thursday, further selling. Friday, stalemate. Right? There's your buy. You break above there on the daily time frame. You can get even more fancy if you go on a lower time frame. But all you need to see there is you break above there. Pure price action wise, that'll be your reversal signal. In terms of moving averages, it tested the 20 right there. Strong trend line right now. Trending action on the moving average. Okay. And let's do one more name. Tesla. Another name that looks like it's going perhaps to 1,000. That's the possibility with Tesla. So here, Tesla is on this week here. It actually did go inside bar up on Tesla right there. It came back on the range again, but we like that. That does not invalidate the signal. A lot of people, they see this break above that and it doesn't stay above there, and they lose interest in that name. In fact, the signal is still applicable so long as you don't break below this par bar's low. This could still be in play because all we have here playing out now is a breakout pullback scenario. That's what happened. Breakout on Tuesday, pulls back in, and here we go. A break above there on Friday, which caused this thing here to come back up again, take out that pivot high. Tesla, watch it this coming week. Okay, lastly, let's do some stars and dogs. Let's talk about our stars first. We'll do a daily chart. eBay on fire. You're gonna see a pattern in these names. eBay rocking. Okay, Shop rocking. All-time highs on Friday. All-time highs. Look at that. Look at the stock and look at that stock on Shop. Wix. Look at the move on Wix. Look at that. I think that's all-time highs on Wix. Okay. Etsy. All-time highs on Etsy. SFIX. Not all-time highs, but man, a lot of strength the past week. Gunning. You see a commonality there? All online retailers, right? So that space is rocking. Wix closed that gap that was all the way back here. I think it closed the gap here too. It did. It closed that gap all the way here. So yeah, SFIX flying as well. One final technology name, Okta. This is more of a technology company that has to do with the underlying bones of the infrastructure of the internet. Again, this is going off 52-week highs. In fact, all-time highs. So Okta, another really nice name to have on a watch list. So that thing is ripping. All-time highs. If you were to say, like, where's the pullback that happened? Come the coronavirus, that month there, March. We had a bit of weakness here in September, but prior to that, this is back in 2019. So here, that's all that month was. And look, they bought it back right away. So this company is not being affected at all by the current environment. Now, dogs. What are some companies that are just not doing well in this environment? GE. Wow. GE has not found a bottom yet for 2020. It made some fresh lows here for the year. AAOI, so semiconductor name, got really weak this past week, coming back to the range now. Brokers, AMTD, so Ameritrade, TD Ameritrade, weakness. So this 2 weeks now of weakness, so the trend is actually getting stronger on the downside. Although they did touch that quarterly open, so they defended it. IBKR, Interactive Brokers, same thing. You'd expect that people are trading more, so these names would be doing well. But the past couple weeks have been very, very poor for IBKR. And we talked about Nucor already, right? So Nucor, very, very weak. Steel company, steel name. And two more names. Let's do Intelsat. So they declared bankruptcy this past week, or some debt restructuring. This used to be a big stock. If I go back here, it used to trade around 37. You're now trading at 40 cents. So things can always get cheaper. So you can never use that as an excuse not to buy something. It looks really cheap here. Well, yeah. If it goes bankrupt, it's going to get even cheaper. So have earnings coming out on the 18th. And finally, TDC. So not all tech companies are working. Teradata, which actually builds databases, which used to be a high flyer. Late last year, it was trading at 49. Now trading at 19. So that got a haircut. Has not come back. Surprising, since this company is actually tends to sell some very, very interesting products that are good for that are used by many companies for data analysis. So. That's a wrap for this week in terms of stars and dogs, in terms of the video. As always, if you have any questions, please feel free to leave them in the comment section, either on the blog or on the YouTube channel. If you like the video, give it a big thumbs up. If you want to know when the next video drops, You can either subscribe on YouTube by clicking on the big subscribe button, or going over to the blog and subscribing to my newsletter. The newsletter comes out every Sunday evening or afternoon. Comes with the link to the video, as well as some of the things that I'm looking at in terms of trading perspectives. As always, I wish you a good trading week. For those folks in Canada, happy Victoria Day. Stay safe, stay well, stay strong, and once again, all the best. See you next week.